so we are here today for our first investor social of the year. My name is Natasha Phipps, and if you don't know who I am a real estate investor, a investment focused realtor here in Calgary, and I'm joined here by my entire amazing team here tonight, which you're going to meet and hear from a couple of them this evening, and maybe all of them near the end as well. But we wanted to give a market sort of address this evening, since things have really changed a lot very quickly here and are rapidly changing, it seems, week to week. So we want to kind of give you a boots on the ground update of what's actually happening out there, to prepare you if you are either in the market looking to buy or sell. We're going to talk about both sides of the equation and what you need to be mindful of and how you can maximize your experience on either side. So we are going to get started. As I said, my name is Natasha Phipps. This is my amazing team here. So we are all investor focused realtors. We're all local to Calgary. And we love Calgary, first of all, but also love real estate investing. So we host these events once a month and pick a different topic. So if you enjoy this event, please do join us at the future ones. We do record them as well and share out the recordings. People ask that a lot. Will I get a recording? Yes, we always put the recordings on YouTube as well, on our YouTube channel, Calgary Real Estate Investing, that's called. So would love it if you'd go subscribe to us there, and you can see if you miss events, plus all the other video interviews that I do with real estate investors live on that site. So please check that out. And here is our private Facebook group called Calgary Real Estate Investing. Please join us there if you'd like to stay up to date on what we're up to. We post deals in there, off market, on market. It's a great place to ask questions about the local market. We've got about 1,800 investors in there now who have a common interest in the Calgary real estate market. So they're from all over the country, and it's just a really great place to get your questions answered and meet other individuals looking to connect about Calgary real estate. So we are realtors. We're investor focused realtors. If you got value out of our presentation and all that we do for these groups, we are here to help you as realtors in our market, and would love to help you how we can. So we are going to just quickly go over what we're going to do tonight. We're going to give a market update with Alexandra Sell. Can someone mute whoever's making noise for me, please? Alex or Dre, I think, should be able to. Someone's driving, it sounds like. Whoever's driving, you can hear your signal. Anyway, so we're going to do a market update as to what's going on out there. We're going to talk about kind of some economics, some actual stats, a bit of a summary of what happened in 2021. The Calgary Real Estate Board just released their forecast for this upcoming year, as well as a kind of overall review of what happened last year. So we'll talk about that. And then we're going to talk about how to navigate this market as a seller and how to potentially maximize any properties you might be looking to exit, whether it's your primary residence or a investment property. And then we're going to talk about if you're a buyer right now and how to make your offer stand out, what your team should be doing for you, how you can be prepared. And as of course, we're here to help you achieve your goals, and please feel free to ask questions at any time. And I love it when you put comments in the chat or questions as we go. It's just great to kind of get a sense of if there's something you want to chat more about, or if there's something that's not clear, please put it in the chat and we can address that as we go. And then we'll also have a question and answer period at the end. And then our team has a big announcement that we're very excited to make this evening as well. So that'll be near the end. We'll be making an announcement of some expansion to our business. So we will talk about that at the very end. So thank you everybody for being here. And we are going to get started. Alexandra Sell is going to speak this evening on the current market conditions. Alex is an experienced real estate investor and realtor here in the Calgary market, and is a great boots on the ground kind of update for us today. So I'll turn it over to you, Alex, and I will spotlight you as well so everyone can see you. So take it away.
Okay. Hi, everyone. Super nice to be here. I put on this slide just a few numbers, and I know that numbers by themselves probably don't mean that much to you, but we'll dive into this. So in January, which hasn't finished yet, we have 787 total sales, and I'm just talking strictly of detached homes. To new listing, 863. You don't even need a calculator to see how close these numbers are. We also have, as of last week, 297 pending homes and 840 active listings. This is across Calgary. But what this should tell you is that January started with some of the lowest inventory we have ever seen. And in fact, last month, December, was the best on record in terms of transaction numbers. You can also see that in terms of months of supply, we're under 1 month, 0.89. That's not a lot. Average price went up to 600,017. But the interesting thing is that that price keeps changing from week to week. And I think Natasha's gonna maybe dive deeper into this. And also days on market has shrunk. We are at 29 days on market. But as a comparison, this time last year, it was 67 days on market. So the sales basically exceed new listings by about 16%. And months of supply are at the lowest they've been, just below 3 months. And of course, this is going to cause prices to go up. Since 2021, the prices have increased 10%, and they keep growing exponentially. Like Natasha mentioned, this morning CREB released new forecast, and in it, it's an excellent forecast. We can email it to you guys if you want, some light reading, but they're predicting 0 signs of slowing down anytime soon. And those of us who are out there shopping with clients and writing offers, we really see how quickly that's changing, because at the beginning of January, you could write an offer maybe 10,000 over asking and have a chance. And right now, in certain communities, we're talking 50, 60,000 and higher. So there are a couple factors that contribute to this. Just like everywhere else in Canada, materials, labor, supply chain shortages, all of that is through the roof, which of course makes new construction a little bit less attractive. There are some long timelines. Natasha mentioned in the previous social that it's really difficult for us to be selling the new builds. A lot of builders are not even accepting purchase contracts, and that also trickles down, and resale homes are strong. Inventory is super low. Obviously, with less listing, there's more competition, more buyers are coming each week. And another thing that's happening is that millennials, which are about 36 years old right now, they're getting into the real estate market as well. And they are, they're ready. They have strong purchasing power. They're often salaried. They had lots of savings that they were able to save in the last 2 years of sitting at home during COVID. They have strong income positions, and they are pushing up the property ladder too. They're buying up anything under 600,000. And again, multiple offers everywhere. And another thing that contributes to this insanity is investors. That's you guys, many from out of Alberta. They're buying up Alberta. They're seeing value in Calgary. Oftentimes, investors from other provinces are obviously priced out of those markets, and you can still find a good cash flowing property here. And also in recent months, rental rates have gone up as well. So those numbers simply work. And another thing to just kind of follow with that is that during COVID, working from home became popular, and it opened up doors to a lot of buyers, maybe not so much investors, but just buyers who are reassessing their situation. They're looking around, maybe they're sitting in a small shoebox downtown Toronto, and they're thinking, what will my money get me in other markets? And Calgary suddenly is looking really attractive. It's obviously less expensive, but still very affordable. And there's a lot of good stuff going on in the city. In fact, population in Alberta has increased, and this is the first time that it increased by 1% as opposed to exiting. So approximately 40,000 people immigrated into Alberta last year. So really good news, but not so good news for those who are in the market to buy. Our economic position is also strong in Alberta. Unemployment dropped to 7.3%, so pre-pandemic levels. Oil and gas, super strong. Consumer spending is up, consumer activity is up, and of course, more jobs and population growth goes hand in hand with more demand for housing.
Mm-hmm.
And another thing that I think is pretty obvious, and that might change as soon as next week, but money is still cheap. Interest rates are expected to rise, but they will still be exceptionally low if you compare to some of the rates, let's say in Europe or everywhere else. So all in all, Alberta is poised to be a very, very attractive market, and all of these conditions add to a really strong seller's market. And I think it took a lot of us by surprise. So yeah, that's what I have for you.
Thank you so much. I mean, I think it took us in Calgary longer to realize what was happening than the rest of the country, because it was like all eyes were here. And I think it being here, it just took us all a while to, I think, notice that. So thank you so much for that, Alex. Let me see. So what Preeti just asked, what is causing the housing market to go up? So supply and demand plus economics is what's creating this. So when we're looking at the real estate cycle and real estate markets and what causes them to boom, is the basic economic indicators of population growth, GDP growth, people, where are the people going, and the overall economics drive these conditions. And that, combined with the actual supply on the market and even supply chain shortages, has caused a very, tight market. And then looking at the whole country, with Alberta now being, so Alberta saw the largest interprovincial migration last year of any other province in Canada. A lot of people outside of Alberta are looking to Alberta now because they cannot afford Vancouver and Toronto. And these younger people are moving because they want to get into the market. Maybe they can work from wherever. That combined with low interest rates and all of these market conditions is going to create prices to go up. So low inventory, high demand, really good economic conditions. And what I will say about what feels different, this is my kind of third sort of boom period as a realtor and as an investor here in Calgary. And what I'm excited about this time around is this isn't just driven by one thing. It's not just driven by the price of oil like it was previously, where it was like, money was raining from the sky and you couldn't not make money here for quite some time. And right now, this is driven by diversification. And yeah, I know, thanks. This is driven by diversification and demand and economics of what people want, which is great. And the diversification is amazing. It seems like every week there's awesome headlines of some new startup or company making their way to Calgary, because we have really great workforce.
And you know what else, Natasha, just to interject, space. It's not just that, but believe it or not, people are moving here for lifestyle as well. Just in the last couple of months, I've sold quite a few houses sight unseen to people moving here from BC. And I was laughing because who moves here from BC, right? It's usually the reverse. But I think that what they were saying is that forest fires in Okanagan are getting worse and worse, and they're starting sooner. They used to be in August, and now it starts like right away, in June and sometimes May. And even if you don't have forest fires directly in Okanagan, you have the forest fires in California. And also healthcare is really good in Alberta. So a lot of people who left Alberta may be thinking, looking for the lifestyle in Okanagan are now kind of reassessing. Oh, and also a lot of them are snowbirds. They like to go somewhere warm in the winter. So they want to be somewhere where there is international airport, and good transportation routes. So there's so many factors other than just economics. And job.
Absolutely. Yeah. Yeah. Lifestyle is a huge piece. I mean, being close to the mountains, period, for all ages is a huge draw. So yeah, we don't have time to dive too much into this, but there is a few slides I want to show the different sectors of the market, like detached, attached, condos, and just quickly go over what the state of those are. Why that's important is because, as we just saw, Alex went over just to show us an example of what's going on in the detached housing market. As prices rise in the real estate cycle, that will put pressure on the denser products as the market continues to grow, because people will be able to afford less. So as real estate investors, to be strategic with that, we want to always try to be ahead of the curve if we can, right? So knowing what's coming, depending if you're buying or selling, is really important. And so I want to talk about the differences in detached homes, attached, row, and condos. And then we will talk about what that means for us as real estate investors as well. So we will get started on that. Just going to get this out of the way. So this is in the Calgary Real Estate Board forecast document that was put out today. So if you do want that, maybe we'll post that in the Facebook group or send me a message about it. It's very easy to find, but this is for the detached sector. And this is a review of last year. And why it's important to know what is going on with these things is to see where the market is headed. And as we just talked about, the detached sector is in extremely high demand. Any listings kind of like, 700,000 and other, and under 6 and under, but even my listings above 600 are going into competing offers. It's just madness. You're putting the house up on a Wednesday for sale, and by the weekend, you're looking at reviewing offers. Now, you do need to still price the property correctly and do everything we want to do as sellers to maximize the property, but that is happening very quickly, and we're seeing some very exceptional numbers coming out of the market right now. So looking at last year, the benchmark price for detached homes has gone up just about 10%. So the benchmark price for detached houses for the previous year is $529. As Alex just told us, for detached houses, for just more recently, the average price was six. I can't remember what it was. Alex, do you remember? 620, I think it was. Anyway, so that's already gone up. 617. Thank you. So that's already, like significantly growing. So these changes are happening very quickly. Now, what I do expect is this to continue to remain this way throughout the year, but will also continue to start dripping down into the more dense products. So detached sector is just wild right now. Looking at the semi-detached product, which a lot of us own as real estate investors, we have been selling a ton of semi-detached products with legal secondary suites in the last several years. This is a very popular, product to buy as real estate investors. And as you can see here, the year-over-year benchmark price here is around 8%. And I do expect this number to jump up higher, in relation to last year for this year, as buyers have to, kind of tighten up their budgets to be able to afford something. This is going to trickle down. And these maps, I think, are really great too, to see like where has seen the largest appreciation here. So I really like this map here. So we have nothing, that was less than zero. Like there's been no negative property values occurring here in the last year in Calgary, in the semi-detached sector, and everywhere saw some appreciation, which is really great. And if you did buy, a new construction product, which we have sold a lot of in this sector, the downsides were obviously that there's been delays, they've taken longer to build, but the amount of equity that you have built up in the last year is substantial. It is substantial. So, remaining patient in this sector to realize those gains is really the key here, and not to panic, because the market is rewarding you for your patience. And we do have opportunities for those still. I just saw Nepal asking about opportunities. We do have new construction opportunities on our team. We're not going to be talking about those specifically today. We're just doing a market kind of analysis here. But if you want to know opportunities, let us know. We actually have legal secondary suite opportunities in Edmonton and Calgary, or Calgary and Edmonton, more so Calgary, but I actually just got some in Edmonton as well. because the other thing to talk about is just Alberta as a whole. Calgary tends to move first in any direction, positive or negative, when you look at our history. And so if you're wanting to kind of foresee the future, using history as an example, Edmonton could be a good consideration as well, because they tend to follow the Calgary market, about a year behind us or so. And so if you're a, person who wants to attempt to time as best you can, Edmonton could be a good market to consider. But for Calgary, we've got, pre-construction condo deals, we've got new builds, legally suited products, and then all our resale opportunities as well, which we're going to talk about. So let's get back to this. Row houses. So as you can see here, this benchmark price went up 6%. So not as high as the attached or the detached. So you can see where I'm going with this. As we get denser, the benchmark price hasn't improved as much, but has more room to do so. So this could, be something you want to consider when you're strategizing here. And then into the apartment sector, which was the hardest hit sector of the market. Condos always are. They will swing the most. They'll swing the highest. They'll swing the lowest. They're the most volatile sector of residential real estate in any city. And Calgary is no different. And they are what took the largest, hits in terms of property values from the last recession. So to see any sort of positive improvements in price, though we still have a long way to go to, get to the point of where the highs were in the last 10 years of apartment style condos, particularly in downtown. It's nice to see that we are actually moving in the right direction. So it's nice to see positive appreciation on apartment style condos, because for years since 2015, this has been a negative number. It's been coming down, 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 down. So again, this is why I am starting to mention condos more. You haven't heard me talk about condos for a very long time, and that's why. But knowing what we just talked about, that there's this downward pressure and the supply is going to get eaten up, and people are going to have to look at different options that will seep down, to the townhouses and apartment style condos. So it could be a time to look at condos again. Now, where is important? The city center saw the largest hit in terms of property values in the recession, as well as the most vacancy of anywhere in the city, the most supply, like just too many condos, overbuilt. But now that things are starting to get more balanced downtown, it's not like there is, a lot of new things coming. And so I think, it could start to make sense to look in this space again. Plus, this sector of the market is not competitive. You're not having to compete. Same thing with townhouses. Some of those are still flying, but it's not nearly as crazy as it is in the detached sector of the market. So just bear that in mind when you're out there shopping. And any questions about that? So this is what I kind of want to talk about tonight, because this is where in a hot market, in a busy market, and this applies to any market, but this is really important as us real estate investors to keep a cool head, to be strategic and smart. And I want to talk about being a seller and a buyer. So if you are a seller in this market, good for you. Unless you're trying to move and stay in the same price point, you are probably going to be very happy with your result. And so, but that doesn't mean we want to skip steps. When things get hot, people tend to, I want to get things done like tomorrow, like I want to list my house tomorrow. Still take the time, still make sure your realtor isn't skipping steps. We still want all the professional photos, the virtual tours. You still want to maximize everything that your house or property has to offer to the market. And I know that can be difficult if it's a tenanted property, but do what you can to maximize this property, because it will pay off tenfold in a competing offer situation. And so things that you want to make sure you have done to your property is the same as any market. You want to declutter the property, block off time for showings, because the market is so busy. There's nothing worse than listing a property and then we can't get someone in there to view it. So don't list a property if you're not prepared right now to block off several days, that the property can be accessed. And make sure you have your real property report ready and updated and done. will realize that things are going to start moving very quickly, and it's much better to be prepared than trying to, make it up later. So real property report. Deficiencies. If you want to be an incredibly nice seller, doing a pre-listing inspection to your property, even to determine if there might be things about your house that you don't know, can be a really great way to be super prepared. And when people are competing, they, don't have the time necessarily to take the time to do the proper inspection, and that. So it would just make your property stand out even that much more, and make people feel even that much more comfortable to go in unconditional, or to remove that condition from the deal. If you're already being honest and upfront and showing, everything you can, if you're showing your cards, that will go a long way. Make sure your team is aware of what you're doing here. Your realtor, given we haven't been in this, height of a market for quite some time, many realtors out there, this is the first experience that they've had of this type of market. And finding someone who has experience with this, I think, is super important, or at least who has someone around them who has this experience, to maximize everything for you. So make sure you're getting good advice. Staging is still important, making sure that you've spoken to your mortgage broker and lawyer, but whatever you're doing next, don't wait until that last final minute and everything's stressed out. Plan ahead of time. And I think that'll pay off big time. So as a buyer, which is where, where most of the struggle is, being the seller, you're in control. Oh, I actually do want to talk a little bit first before I move on to the buyer. As the seller, it's important to know, I see comments all over the place about this. In Alberta, the law around competing offers is the seller is in charge. The seller is in control. If the seller decides they, want to disclose this, great. If they don't want to disclose this, great. If they want to, go back and send everyone away and tell everyone to come back with a better offer, they can do that. They can really do, what they want inside the law, with instructions to their realtor team. So it is totally up to them essentially how it goes, which is why you might not experience the same thing every single time. Now, I know that can be frustrating, but that is, kind of how the law is written here in Alberta. And you can find more info on that if you just want to learn it yourself on the Real Estate Council website of Alberta. So more importantly, probably, and where I'm more concerned for our investors, for even our homeowners, anyone who's trying to buy right now, this is where things happen and people make mistakes, and those mistakes can be very expensive. So what I want to talk about today is we're first going to talk about your offer, then we're going to talk about kind of how to reduce your risk. So this right here, the number of offers and what is actually on the table is a very, very critical thing that I find not many people do. So if I take you to show a property, or someone from our team does, and we call the agent, okay, well, we've got, 2 offers. Most realtors that communicate that, ask that to me, do not ask me who the agent is. Now, if the seller has told the listing agent not to disclose how many offers they have, then the listing agent can say, I've been instructed not to disclose. But typically it's in everyone's best interest to know how many offers are on table, especially if it's a hot listing. And so if I cannot verify who those other agents are, it makes me question, and usually they're very forthcoming. It makes me question whether they actually have those offers in hand. Now, it's the law, it's our job to, not lie and to say we have things, but it's different to say, oh, I have a couple agents sending me offers, rather than I have 2 offers in my hands, signed and executed, and these are the agents. So make sure we're clarifying the difference on that, so that you're not overpaying or making your offer more aggressive than it needs to be, if you don't need to go quite as aggressive, maybe with less conditions. So always ask that, when number of offers, what does that actually mean? And is it actually in hand? The second thing is really knowing your numbers, and knowing the risk of going unconditional. So right now we're seeing unconditional offers all over the place. And ideally, you don't want to buy a property unconditionally because you at least want to get an inspection. You want to get it approved and get your appraisal done, whatever due diligence you need to do. But in this tight of market conditions, you do not have that luxury often, especially in that detached sector that we're talking about. And so do not go unconditional if you're not prepared to deal with the consequences of what that could mean. And if, let's say, you do not get your, selected lender that you wanted, your A lender that is going to give you an amazing rate, know what is plan B and what is plan C. And if you are not okay with plan A, B, and C, then do not go in unconditional. Or if you don't even know what plan A, B, and C is, then definitely do not go unconditional, because you need to know what that means for you and what those risks are. And you could lose your deposit, of course, if you don't close your transaction, but more so, you're also in a breach of contract, and you could actually be sued. And we will see lawsuits as a result of this. And you can see this, a lot in Ontario as well, where you have a chain reaction of things that go wrong. So one person can't close because they got greedy or got, aggressive with their price, put in a very high offer. Now they can't close, and it's a chain reaction of other people who sold and bought and sold and bought. And guess what? Everyone is just suing each other up the line. So as a seller too, just because you get a crazy high offer does not necessarily mean that is your best offer. Just to give you an example, on Friday, we had multiple offer situation. We did not take the highest offer because me as the listing agent, my job is to see what I can get out of these other realtors in terms of information and ask questions and make sure that I am doing everything I can to put my sellers in the best situation. And the highest offer actually disclosed to me that they were not pre-approved, and that so even though they were the highest offer, they did have conditions, but my clients were really attracted to the bit lower offer, that was unconditional, because that meant they could move on, and here we go, right? So the number is important, but also it makes me leery of people saying they can pay $700 if they don't even have a pre-approval in place. And next thing you know, you've gone 10 days of conditions, you've lost your chance to be the first to market on, on that first listing, and you're back to square one 10 days later, which could be a problem for you if you're trying to buy something else. So I hope that makes sense. But sellers, no, in that situation, yes, we did take a little less because it was unconditional, but there's sales report at the MLS that are $80,000, $100,000 over list price with no conditions. So certainly it could mean the difference to have it, sold right now and no worrying about it, but it's not guaranteed. So keep that in mind. Also, the risks of not having an inspection. We don't need to go through that. We're all investors. We know what that could mean, and just being aware of it. So if you don't have extra cash laying around for unforeseen things, that if it would really mean, a huge difference for you to have to sink in, some extra money into this property, like an extra, 10, 20,000, like what would that mean to you to do a little bit extra work? And if you don't have access to that extra capital or money, or it's not available to you, then I would say those risks might be a little bit scary. Now, this one is more like the strategy and when to submit your offer. So you're seeing a period of time, and maybe some of the agents from the team want to jump in as well on this, but you're seeing on listings a period of time where it'll be like, okay, we're going to list on a Thursday, we're going to allow showings, Friday, Saturday, and then we're going to look at offers Sunday evening, which in theory is a great idea, because everyone, you give lots of people the chance to get to the property. It's the kind of nicest thing to do in terms of letting everyone get a chance. However, it is happening, often where all of a sudden it's just sold. They will cancel your showing for Sunday that you thought you had and say, sorry, we just got an offer, we can't refuse. So if you're interested, you can certainly put your offer in earlier. And if, for some reason you want to change it or whatever, you could do that prior to the offer presentation, but at least you're kind of in the, in the line at that point. And I get asked often a lot, like, will I get a chance to change my offer? Will they like come back? And again, it's all up to the seller. We don't know if they will give you, an opportunity to change your terms or conditions. We don't know if they will say, do you want to increase your offer? They may just take another one. Exactly. Bully offer. They may just take whatever. It's up to the seller. That's all you need to know. It's up to the seller. Okay, Michael, any strategy as a buyer for situations we have seen too often where offers will only be accepted on a certain date and time? Any other tips to stand out? Yeah. So certainly, yes, that's exactly what I'm talking about. People will say offers can only be accepted on a certain date and time, and then you'll see it sold. So unfortunately, in those situations, like, it is what it is. It's just, they got something they couldn't refuse. But to make your offer stand out, like, one thing is your realtor should be focused on the relationship with the other realtor. There's nothing I love more than working with realtors that I like and that I know are organized. Their clients are pre-approved. They, show me the pre-approval letter. They've got maybe a message from their clients about what they love about the property. They are their contract is, clean and put together well. So making sure whatever's being presented to the other side, not just from you, but also from your team, is very important. And too often right now, people are just texting quick. They're just sending, offer sent. Like, no, like, call me, let me know it's coming. Let me know I got it. Make sure that your team is communicating, and that will stand out, and it will stick in my head as at least a listing agent to know that, okay, I know that Dana has her stuff together, and I know that she's called me. It's like having good communication.
Can I add to that?
Yeah.
One thing also to the point of Michael's question is, one thing that I do for my buyers, especially since we're shopping in the price point that everybody wants to be and in areas where everybody is competing, I let my buyers in advance know what, like, the last 3 days of sales have been like, and I show them what the properties were listed for and what they sold for, and because there's nothing worse than an uneducated buyer, because in this crazy market, all the comps are really going out the window. It's what buyers are prepared to pay, and it's really seems quite unfair. And so if your clients are still learning and they're saying, maybe I'll go over 15,000, but everybody else is writing offers 50, 60, 70,000. If they're aware of that, it's not going to maybe seem as shocking. So really share your information with them. And before going to write, make sure that they kind of know that the last 3 homes didn't sell for 15,000 over, but you got to be closer to there. And if that means you're not approved for it, then perhaps we can take it down a notch and look at less expensive homes where you can be that winning offer.
Absolutely. Yeah. We're at a time now where you need to be shopping below definitely below your budget, like as much as possible, so that you can compete in a way that makes sense. But there are other things, and I care a lot about terms and deposits. Deposits are huge, and a lot of people don't know why deposits are important, actually, including industry people. But if that scenario happens, like I talked about, where deal A doesn't close, so now deal B is screwed, and so is deal C. The deposit that was on the deal is crucial, because that for the seller is what is going to basically give them some sort of remedy for you being in a breach of contract as a buyer, which is why you never want to be in breach of contract. You're better off, like, and us as investors know this, you'll find private money, you'll find a way to close that deal if for some reason your financing didn't work out. But often regular homeowners we're seeing, like your stories about, that's not the case, and then they can't close. So the deposit, when I'm looking as a listing agent, even as a buying agent, if I know we can put down a good deposit, that to me as a listing agent makes me feel very comfortable that buyer knows that they are going to get this job done. They are going to find a way to close, even if it's not their plan A, right? So have a strong deposit. Terms, if you're comparing contracts and you've got one contract that's got 15 terms about all the little things that they want in the house, and in the yard and all this other stuff, like it just comes across as kind of nitpicky. So try to keep, those like more smaller things, details out of it. Which I know as investors, you guys are really great at, but it's just a good reminder. Don't sweat the small stuff, right? Like don't worry about the big stuff. Don't worry about the small stuff. What would be considered a good, strong deposit? Well, and that depends on the purchase price, right? So like we can use the example we've been talking about, that the listing that I had at 650,000 that we just sold, that one, the best deposit we were offered was 50,000. And that was a really good size deposit compared to the others, and it definitely made their offer stand out. They had some other things didn't work out, but in that price point, that was a really good number. Oftentimes you'll see, anything from 5 to 20,000 is kind of like more normal in that price point. But if you can like stand out, that shows me you're confident and you are going to get this done, because you do not want to lose your deposit. So
another thing you can do as a strategy too, if you absolutely need to have financing and inspection condition, I often include the buyer's pre-approval letter that I get from the bank ahead of time, and write 1 or 2 sentences about their circumstances, that they are a school teacher employed for 10 years, and here's their pre-approval letter from the bank. I think it's just makes that offer so much more organized and really stand out.
Mm-hmm. Yeah, absolutely. Terms and deposits, knowing your agent's duty. Excuse me. This is where I think people get a little bit, I hate to say the word complacent, but like it's not even complacent. It's that everyone's busy. Things are going so fast. Everyone is, going 100 miles an hour. And it's very important to communicate to your agent what you want disclosed and what you do not want disclosed. And that they are strategic with what they disclose. So sometimes I'll use a strategy where I will disclose things like on purpose to make us look better or stronger, but then you don't want to disclose certain other things, right? So just making sure you're having that conversation, because I feel like sometimes people are under pressure and they're negotiating, they just will blurt things out and it's not, in their best interest necessarily. We cannot, withhold anything that is breaking the law or illegal, or we cannot hold, defects in a property. We have to answer all that kind of stuff. But I'm always surprised at how much people tell me when it is not probably helping their case or helping their client, but they do so, just because they're under stress. So be very clear what you want, what you feel is a strategic amount of information to be disclosed to the other side. Doesn't giving your pre-approval letter overkill your negotiation ability? No, giving your pre-approval letter means I will be more considerate of the offers that have conditions. So like say you have, an offer that is higher in price, but has conditions. If I feel confident that you can waive your conditions and you're actually pre-approved and you booking your inspection and you're doing all those things, then the seller is going to be more motivated to work with that deal, because at the end of the day, like money does talk. They want more money, of course, because they're selling. So you might have more of a chance with the conditions of getting what you want when you like show you're pre-approved. So give your pre-approval letter, say that you've booked the inspection tentatively, you've called your inspector, hey, can you be there Monday? You've already done those things to say, I'm working on it, we're ready, like, but we're unprepared to go conditional, but to go unconditional, but we can go conditional. And here's what we've done to be as ready as possible for it. So I think that helps you big time.
Can I just jump into one more thing that I just remembered, because we haven't mentioned it, but the market has gotten so busy that right now, like it used to be that, let's say you're a seller and you get multiple offers and you go with one offer, but you try to line up a backup offer for your clients, right? In case the first deal falls through. But nowadays, people are not even accepting backup offers, because they know that the prices are going up so quickly that in the event that this deal falls through, they can actually increase the price go back to the market, start the process again, and more likely than not, they'll end up with even better offer than the one that they committed to.
That's right.
That's kind of crazy.
It is very crazy, which thinking strategically as real estate investors, I actually didn't put a slide about this. I'm going to talk about it briefly. I'll just stop sharing for a minute here. Is like, how does all this apply to strategy as real estate investors, and knowing the real estate cycle and what strategies work best when is, in my opinion, the key to being a successful real estate investor. And when the market is moving fast like this, as Alex just said, like the property value could be different now and next week. So it's a great time to be doing BRRRRs this year. It's a great time to be flipping. It's a great time to be trying to take advantage of this hot market by doing some shorter term stuff. It's a great year to be getting any appraisals on any property you might have, renovated in the last couple of years to try to tap into some extra equity. You may not even know what your properties are worth right now. And so that could be a really great opportunity this year to even improve properties you already have and let these comps roll through this, spring and summer of these higher prices, and then tap into that money come summertime that is now sitting there in your existing property to buy something else potentially. So I think that strategy will work very well this year. I did see a question about cash flow and opportunities. We'll talk about that at the end. We're almost done here. I've actually only got a couple more things, and then we'll get into the Q&A. Look at us, we're like right on time here today. I'm proud of myself. Did anyone else from the team have anything to add about kind of the market or your experience? Andrea, did you want to talk about anything on the forecast today, or did we kind of hit it? Andrea was actually at the Calgary Real Estate Board forecast today, thankfully. So I don't know if you do want to add anything, Andrea.
I think you guys did a really good job of covering the main points for sure. And I will post the full report in our Facebook group for anyone who wants to look at some more of the details.
Awesome. Perfect. Yeah, that'd be great. Yeah, it's just the main message is just be prepared, know what you're getting yourself into. Off market, if you can find anything, any distressed sellers, any distressed properties, that's going to be a really great opportunity this year. Solving that problem for the end user who, anything that's going to add inventory to the market this year at all in any way is going to win. So keep that in mind. If you're in any conversations, you hear about something, death or divorce, any drama, see if there is an opportunity to help you there. I'll talk briefly about the rental market just because there was a couple of things about that. Denise was asking about that as well. So the rental market, it follows similar to what our market is doing right now. Now, it does vary based on, again, property type, location, and where we're talking about here. But what we're seeing on the rental market side is still, the highest vacancy is still closer to downtown. Right downtown is the highest vacancy numbers. We're still seeing, more vacancy, flatter kind of rents there. Out in the suburbs, as the last couple of years has gone on, you're seeing rental increases. There's reports, I didn't link any of them in this presentation today, but if you Google Calgary rental rates, you get all kinds of stats, but rental rates have been going up, which is great. And as rental rates rise, that same effect that we talked about on the sales side, where owners and buyers and investors will have to start kind of going to less density products, that will trickle down eventually to the rental market over the next few years. And that is why, condos in the rental market, like right this minute, are a little challenging. But if you're, looking at, say, a pre-construction condo or something that's closing in, the next year, let's say, I think you'll only continue to improve. And we're just starting to see those improvements happening. I know there's many investors who got, just worked with downtown condos in the last, decade here in Calgary. It's been super, super challenging for them. So I do think we're starting to see tides turn a little bit, but the safety really still is in the suburbs. The highest demand is still in the suburbs. The cash flow is still in the suburbs, where you're, looking at suited properties, single family real estate in semi-detached or detached homes, small multifamily type stuff. And it all comes down to who you want as your tenant. Of course, I usually start there. I'm talking about rents, but yeah, that's kind of what we can expect. And we actually have some news on that actually right now. So if you have any more questions, just pop them in the chat here. And I'm going to just put my screen share back up. Actually, we rented a property just 10 days ago in Silver Springs, and it was the upper unit. So usually January is like, it's okay, but it isn't the best. It's better than December. But I was shocked at the quality of tenants that I had apply. It's a 3-bedroom, it's just got, it's got 2 bathrooms, but renovated 4-level split, the upper part in Silver Springs. And I had excellent candidates. I could have rented to, 10 great people. We did, one week of advertising. I booked 3 hours of showings for us to view the properties, and that was it. No going in and out and driving to the property a million times. And it was rented and leased within two days from there with our top choice candidate. So, and I was able to raise the rent as well. So again, if you have a good product in a good area, especially single family real estate in Calgary, the market is very, very good. And condos are improving. So let's get back to this. So I do have, okay, oh, that was the end of our slides. Okay. The next thing is our big announcement. So I'm really excited to share this, guys. I started this team just about 2 years ago now, and with a goal of just being 100% in this investor space. And I'm just so proud of where we've gone with this. But our next evolution is property management. So we are launching our property management team here. I am going to be driving this bus with Kim here. Kim, I'm going to find you here. Where are you? Can you talk, Kim? Oh, there you are. There you are. Hi, Kim. So so Kim and I, we are going to be starting the property management, the Phipps Real Estate Group property management team. And we will have other people joining us as our leasing agents. But for now, Kim and I are getting all the groundwork set up for this. And we are super, super excited to bring everything we bring to our sales side to the property management side, and to continue the evolution of supporting our real estate investors. So I am super excited about the opportunities of having so much crossover between these two teams and what we can do to support all of our investors locally and across the country. So if you want to know about property management, certainly let us know. But Kim, do you want to say anything a little bit about kind of what kind of services we'll be offering?
Yeah, I am super excited to talk about all the things that we're offering, same as any other property management service, plus a little bit extra for the investors and the people that are buying houses and wanting to rent. We have lots of services and things that we can do for you, and we already understand your mindset and what you're looking for. So that's probably our biggest part of why we wanted to do that.
A lot of property management companies that I have been kind of partnered with, and the people working there are not real estate investors. So us as real estate investors to be bringing that to the table instead of no, and there's nothing wrong with them, but if they don't have the experience of owning rental properties, it's very hard to provide a very good service. And so our goal here is to attract, and we already are and already have people to join this group that are interested in real estate investing or already real estate investors themselves. So I think you're going to get a much more like investor focused approach instead of just managing properties. And we're really excited about it. The prices, it does depend what we're talking about here, whether it's a residential or a multifamily rate, but we're in line with the average kind of prices here in Calgary. Our ongoing property management fee will be 10% for our residential services and 8% for any sort of multifamily type projects. So that's an ongoing fee. We do have our sign-on fee initially as well. But if you're interested, Kim, can you put that form link in the chat that I made?
Oh, you bet. I can get that up there.
Okay, thank you. So if you want to talk to us about property management services, we're not going to, dive into that tonight. But if you're interested and you want to have a call with us, we're going to put a little form link in the chat just to fill it out. Then we'll know that you'd like us to reach out to you. So there'll be more to come on that and more crossover opportunities with things that we have upcoming. So I'm excited about it. But that's pretty well all we had for today. I would love to hear if there's any questions from anyone. Questions, comments, concerns?
Hi there, Natasha.
Yeah.
Hey, it's Sadir from Ontario. I have a question regarding the market there in Calgary. I know you were saying that you're getting into withholding offers, and is there areas in Calgary where that's not happening that are still opportunities for investors?
Well, it comes down to the property type, like we kind of went over, right? It comes down to the price point and the property type. So if you're talking about a detached house between, $400,000 and $700,000 in pretty well most of Calgary, you're going to be competing because there's just not a lot of inventory. And so the other option to not be competing is to go new construction, which there is limitations in the new construction space right now as well, because the land development is definitely behind the curve on what the demand is, but we as our group here and team have access to off-market lots and deals that are not available to the public. So that's a great way to not compete. And then if you want to, focus more on some of those sectors of the market that aren't quite as busy, as prices go up higher for detached and attached properties, and as rents continue to rise, things like townhouses, picking up, a couple townhouses is going to start to make a whole lot more sense than it did 3 years ago, as rents are coming up and the townhouse prices are staying more like, a little bit more predictable than a detached house right now. So I would need to kind of have a full-on strategy call to kind of really break that down for you. But I think that's what's going to start happening. Oh, thanks, Karen.
Thank you. That's great.
Yeah, I hope that helps. And also, that's what we love to do here. That is my favorite part about my job, is strategy sessions. I'm usually sitting here in strategy sessions most of every single day. And that's the first thing we do. If you do want to talk about you and strategy and how our team can help you and what we do, is I need to learn more about you to really give you that advice and what you're looking to do. So if you're interested in that, just let us know and we can set up a strategy session for you. Andrea asked, question was, oh no, Dre is repeating it for me. I see. What would be a fair market value increase for a duplex in Marta Loop? Oh, Alex, you have something like that coming up. Do you have anything to add to that question?
I have infill coming up. That's really fancy and over $1 million, but a duplex in Marta Loop it depends on age and how much work has been done. Last one I saw was 435, but I haven't actually seen anything recently. Marta Loop is becoming really, really busy right now. A lot of infills and a lot of new construction. So builders are buying new, like those old bungalows and putting new infills in there. So there's quite a lot of new construction and new condos going in Marta Loop. I haven't seen too much for semi-detached.
The other thing is, if you ever want the market data specific to like one community, we can send you that as well. And when you pull up the community data, it's really cool because you can see like all the history. It's a big spreadsheet. If you like numbers and data and you're looking at a specific area, it can be really interesting to see what has happened with these numbers over the last 10 years to try to predict a little bit where things are going. So if you want any of that specific data, we can send you those reports. Are multifamily also seeing price increases? I have a few fourplexes, wondering if it's a good time to sell. Yes, we absolutely have buyers for those. The problem with what a lot of people are looking for is that there's not a lot on the market, or they're illegal. I'm not sure if yours are legal or illegal, but a lot of side-by-side duplexes, for example, have illegal suites in them. And a lot of these investors, if they're not local, like they're not looking to do a renovation or a project, and those investors in particular, it's really hard to sell them a fourplex just off the shelf, right? So if you have something legal and it's performing and it's rented and tenanted, it is an excellent time to sell those, I would say, without knowing any more, you know, what you paid for it when you bought it and any mortgage penalties you might have and all that stuff. But I would say, yes, it is a good time to sell those. Great to see your team grow. Oh, thanks, Michael. Yeah, we're excited about property management. Another question I missed was where are condos not renting, or a lot of condos not renting? So the vacancy concerns are higher in condos as you approach downtown. It is improving, like I said, but the reason that was because when the last recession sort of hit, and it was very abrupt, things were not going well. There was a lot of towers and condos under construction, or the permits had already started, or they were halfway built. And a lot of these developers and builders actually pivoted when the recession hit, knowing they would not be able to sell them and turn them into rental buildings. And so what that did, of course, was injected a ton of units and rental apartments into the downtown condo market. And that was obviously a problem. That brought rents down. You know, crazy incentives were being offered, and it caused a really bad supply issue. So downtown certainly is, you know, where you're going to see the highest vacancy. It is getting better though. I'm not involved in any downtown specifically projects. I'm still a little hesitant on the downtown. Inner city, I'm more excited about inner city now than I absolutely was like a couple of years ago. So it's getting better. And if you're looking, you know, say you're buying a pre-construction, like we just had a project that's now sold out in Kensington that we are working on. Like I love Kensington, and I knew it's a 3-year build time, and I knew, you know, less inventory is going to be chewed through. As an investor, I felt comfortable with it. So, but still not, you know, jumping to buy a condo downtown myself. But, you know, there's a lot that can change in a few years. So, is it better to be tenanted or vacant for both single and multifamily from a seller perspective? So if you're selling, it really depends. Okay, so if it's a single family house, or like a suited house or a duplex or a townhouse or something, it really depends on the tenants that are in there and the leases you have in place, and are they going to be cooperative and not. If you think your end user is a investor, then the tenant could be an asset. If you think the end user is an owner and that tenant is not going to be very clean, it's not going to present the property very nice, or is going to be not cooperative, then I would say you're better to sell it vacant. I don't know, does anyone from the team want to add anything to that? You guys are out there showing more than I am.
I find it a whole lot easier to show properties that are untenanted, and you're not fighting with your tenants. In this market, people want to get in there quickly, and they want to get in and get out, and then you don't want to displace your tenants every time you have a showing, and 10 showings later, your tenants are not real happy.
Yeah, 100%. If it's a multifamily building, that's a different story. The multifamily space, for a lending perspective, having leases in place is generally a benefit, unless the leases are really not very good, or which is possible. But either way, then even if the leases are non-existent or not very good, the lender's going to ask questions. So you kind of need to know that stuff. They're going to ask for all the financials and everything like that. So having a multifamily building empty would be alarming. Like that would be a big problem. So you definitely want to leave the tenants in there, and be really organized with all your financials and information and documents, and make it easy for the lender to look at the deal, because at the end of the day, the lender has to approve the building as a business, not necessarily the buyer as a buyer, right? So multifamily, definitely very different. And I do have one thing to add about multifamily. I do see your question, Craig, there, I'll get to you in a sec. Multifamily in most major Canadian cities is hard to lend on because oftentimes when the appraisal is done based on your current rents, especially if it's an older building, it's underperforming literally means that it is underperforming. And what people don't understand is when they're kind of getting into that space is if the building is performing at less than what it should be valued at, then the bank will not lend on the purchase price that likely you're going to have to pay. And it doesn't mean that it's not worth that. It's that the bank will not lend on that number because your rents are too low. And so that's an opportunity for an enterprising investor to do something to the units, raise the rents, but you're going to have some short-term pain there of having to put down a lot more down payment, potentially higher interest rates, and understanding that this is like a step along the way, and hopefully you're going to hang on to this project for the long term. So I just like to point that out because people are often shocked. So just keep that in mind. Okay, thanks so much for coming, Sudhir. Okay, Craig.
Yeah, thanks for the opportunity, and Natasha. Just a quick question about the market right now. Are you seeing any vendor take-back deals going on in the local market or even off-market at all?
Vendor take-back is super difficult when the market is hot. Like
Okay.
you have to think about it from a seller's perspective. And now there's headlines, people are seeing, like how good the market is, even if their property is distressed, or even if it's for some reason, maybe why it could make a good candidate for that. At the end of the day, people want the most amount of money. That's just what's going to happen. And so if they feel they can, get more money on the, market, then likely they're going to do that. Now, if you can find a seller who's willing to listen to you and you can explain to them why this investment for them can make good sense and really leave out almost why you need this, is the key here. And I have seen it done in hot markets, but you need to present it to an ideal seller is someone who is retiring or, getting out of this property for some reason. And they can now have an income for the next, however many years that you're trying to get this vendor take back contract signed for. It's not common. Most realtors are going to they'll just shake their head and go, that is way too much work. No, like I'm not even there, or they don't even know what it is possibly too. Like this isn't a common strategy. So you will need to be prepared to essentially present it that way to the seller. And I think, you're going to need to find something off market to be able to absolutely, to take advantage of that. And then, hopefully, find someone who does not want to go to market for whatever reason, but also could use the investment, and you're explaining to them that it's an investment for them as well. Well, mostly for them, like really keep it on why they should be interested in this. So distressed people, distressed properties, but also retirees can be really great too, because they just might not know. Hopefully that helps. Ben, question, Ben?
Hey, Natasha, how are you?
Hey, I'm good. How are you?
I'm doing well, thanks.
Good.
So my question is specific to my situation, but I think it would be helpful for anyone who's considering new construction.
Mhm.
So I just got my occupancy date,
Yeah.
our closing date for April.
Yeah.
And so my question is, because there's 1 month of property management included, should I right now be
1 year.
looking for, yeah. So basically, is the tenant placement included in that, or should I be looking for a tenant right now?
Oh, no, that is a great question. So at least for our products, Ben, and I can't speak for other, groups, but when we say 1 year of free property management, we mean it. You get everything from advertising to tenant screening, showings, lock boxes, photos, advertising, all the paperwork, collecting rent. We'll even coordinate your walkthroughs with the builder for you. So truly, it's everything and all encompassing for 12 months.
Even the vetting of the tenants?
Everything, exactly.
Okay.
The vetting, the screening, the applications, showings, everything. So now that might not be the same other places or whatever, but that's how we do it, which is partly why I'm so excited to have a property management company, because now I can I can offer these kinds of services and other things that we do. Speaking of that, if you're a seller selling an investment property and you want to, sorry, Ben, I'm going off topic 1 second, but if you want
No,
to
this is all good.
entice your your product even more to an investor, well, just tack on to your sale price enough to pay for a year of property management services for your potential investor, and make it even easier for that out of province investor to get set up here, even someone local, but particularly those out of province investors, because they don't know, they don't have the team, they don't know the people. Like, make it as easy as possible for them. And that's one thing I'm super excited about being able to offer, even on our own listings, to potential buyers. So good question, Ben. Yeah, no, this will be a completely, not hands off, like you'll be informed and updated as you go. And at the end of the day, you will be a part of choosing the final tenant as well. Like, if you're like, I don't want someone with a cat, like, then whoever applied that has a cat, that's a no for you, right? Like, it's up to you. You're in control of who you rent to, but we kind of try to do everything and bring it to you on a platter.
Perfect. That's great to know. And I guess a quick follow-up to that with your announcement, will that be with your property management division or whoever you're working with at the time we had entered into the contract?
It's up to you. Anyone from now on, I am offering it to use our team, but you also don't have to. If you prefer the CIR team or someone else to, the free property management has to be at CIR, but you're welcome to use either one.
Sounds great. Thanks so much.
Thanks, Ben. Okay, I've got maybe time for like one or two more questions, and then I have to run. But is there any other questions from anyone? These have been really good questions tonight. Also, I apologize. I did not do a game and prizes this time. I tried to like put it together like 10 minutes before, and that just wasn't happening. So I'll make up for it next time with even better prizes. How about that? Free property management. Okay, well, if there's no other questions, oh, thanks, Michael. Yeah, here's the property management contact form. If you want to fill that out, we'll give you a call and just talk about our services and fees and everything, and help you out however we can if you have any questions. Thanks, Stan. Did I miss any? I think I got everyone's questions. Okay, I think that's it. We will wrap it up there. I hope everyone got some value out of this evening and learned some things. Please remember, we are realtors. We want to work with you as your trusted realtor partners. We do have a referral network across Canada as well. If you need help outside of Calgary or Alberta, we can absolutely connect you with people just like us in other markets. So we are here to help and would love to connect with you if there's anything we can do. So I hope everyone has an amazing evening, and thank you so much for coming.